Alright traders, happy weekend. Assalamu alaikum warahmatullahi wabarakatuh. Welcome back to my YouTube channel. If this is your first time coming across my YouTube channel, kindly subscribe and on the notification bell so that whenever I drop important video like this, you will be among the first people to be notified on time. Okay, so in this video, this is DXY, weekly time frame. So if you could remember, I think last 2 weeks or 3 weeks in that YouTube channel, I have dropped a video which is a total breakdown and outlook of the monthly and even yearly what we are expecting to be happening on DXY and Euro USD and GBP USD. So in this video, we're going to talk about the next week outlook bias. So we want to talk about outlook bias. Okay, so stay with me. As you can see, this is DXY. So we have a sell side liquidity registering here. That's dollar index weekly time frame. So this is our sell side liquidity. So price have stripped that sell side liquidity already. Okay, so this is sell side liquidity. So from this high to this low, that's the total or the recent range that we have. Okay, so looking at the Fibonacci, this is the premium level and this is the discount. Whenever you are trying or you are analyzing the market, trying to picture the direction, the bias, to keep things simple, make sure that you focus on location first. Where that price is exactly, where price is sitting. Is this premium and discount? You know, price does only 1 to 2 things every time, which is external to internal range liquidity, internal to external range liquidity, premium to discount, discount to premium. That's all. So if you understand the concept of premium and discount and the external and internal range liquidity, you will save yourself a lot of time. You will save yourself a lot of unnecessary, losses from this market. So as you can see, that price is resting in discount level. Okay, that's discount. Where is discount? Below 50% level of that Fibonacci. And this is our range. Okay, so what we have here is relative equal highs, right? Relative equal highs. We can call this as our external range liquidity. Let's say external range liquidity, buy side liquidity. Okay, so this is our buy side liquidity, and the recent range is here. Okay, based on weekly time frame, that's dollar index. So if you take a look on this, we will see that we have a swing low here. What is swing low? Swing low is a 3 candlestick formation. Lower candlestick, lower high candlestick, which is the lower of the candlestick at the middle, and the lower candlestick lower than the candlestick at the middle by the left and right. The candlestick that just superpassed them with that wick, that's what we have, what we call swing low. Okay, so at this situation, that swing low, it's become market structure shape. So you can see sometimes I used to be using such kind of emojis. So if you just note this, for instance, this is our market structure shape. Okay, so let's put it at center, market structure shape. So if from the week, like last previous 2 weeks, that will be, or that will going to act as our internal range side liquidity. But for now, since we are talking about the current market, so we have a clear market structure shape which price delivered here and take all those liquidities here. Looking at how that candlestick is closed, that's weekly candlestick, shows that the momentum or the interest of that price to come back here to rebalance that imbalance, it's it's kind of high probability that it's going to happen. Okay, so what we have here is fair value gap. While leaving, we can anticipate this as CV. Yeah, you can call it. The reason why I'm calling all those names is I want you to just be aware of this, because sometimes you just don't need to be confusing yourself, because it's almost the same thing, just depends on how you notice it, then the name will gonna change. Okay, you can call that CB. What's the meaning of CB? Sex sign imbalance, buy sign inefficiency, or you can call it fair value gap. Okay, so if you just call it fair value gap, it's simple also. Okay, fair value gap, or you can call it also internal range liquidity. It's the same thing. So we have our internal range liquidity, where our liquidity that is also resting above that level. If you're just looking at this, we will see that the 50% level of that fair value gap, which is consequent encroachment of that fair value gap, if we note our Fibonacci from this level to this, we will see that above that 50% level, we have a liquidity that is resting here. So where is this level? This is premium and this is discount. And that's what we call OTE, the 62% level of Fibonacci. That is where we call OTE. So now what we are expecting based on the weekly time frame is the next week we will be expecting price to reverse, because in every situation market must retrace. If you are following me back to back, I think in Director Algo lesson 2 to 3 on Twitter, on my X handle, I talk about why price must reverse, why price must retrace. So now we have our fair value gap here. So we expect price to be bullish until when price come back into that premium level, take all those inefficiencies, rebalance them, then we will be expecting for what will happen next. So my opinion next week, based on dollar index, which is DXY, will be bullish. That's the weekly price, and that's how simple you can just find out your weekly price. Okay, so there are a lot of PDRs you can see here. The PDRs we have here is premium and discount. Okay, some traders that are using ICT concept, they can now note this level also as what? Change in the state of delivery. Okay, change in the state of delivery is the same thing, almost the same thing with market structure shift. Just understand the information behind it. That's the most important thing. Okay, so now based on weekly, this is what we have. If we just straight go to daily time frame, you'll see that okay, this is what we have of daily time frame, and then based on daily time frame, now this is our range. Okay, forget about this range. Now we'll look at the current range that we have. Okay, from those relative equal highs to this swing low here, we will see that again this is discount and premium. So price might likely to come back here. Yeah. Also take that order block and then continue bearish. So based on DXY, weekly time frame and daily time frame, this is our bias, and this is what we are expecting to be happening. Since DXY will be bullish, since DXY is going to be bullish, then what we are expecting on the GU, because they are correlated. So GU and EU will be expecting what? Selling. Okay. So now let's go to GBPUSD and see what we have. Starting from weekly time frame. This is weekly time frame GBPUSD. We have a liquidity here, which is buy side liquidity, right? We can simply call it external range liquidity. We have our external range liquidity here. We have internal range liquidity here. Internal range liquidity here. So since we are expecting full selling, now we'll look at this range, okay? From this high to this low, where price is, here is premium, okay? So we would now be expecting price to come back into discount level. Then from there, we'll be expecting for continuation or aiming for continuation. That's simple, and how easy you can keep it. Just keep it simple, okay? So weekly time frame and the weekly bias, sorry, for the coming week is going to be bearish. And look at how the weekly candlestick closed. So from the Friday outlook and the breakdown that I've sent to my Telegram channel and my X, you'll see that that's mostly the reason why I've been expecting that price to sell. Even though, you know, most people out there have been trying to buy GBPUSD and Euro, but because I saw that, okay, since price take all this internal range liquidity that is resting here, Now we expect a retracement. Why price will retrace? It will keep that or leave that imbalance on weekly time frame, and to show how interested that price or the smart money concept are interested to rebalancing this level, it's either when the weekly time frame candlestick close with that tall wick, okay? That what we tell us that they are interested in rebalancing this level, then they should now continue. So what we have clearly here is we have change in the state of delivery here. We have a fair value gap which is will act as internal range liquidity based on weekly time frame. So simple, if we just now go to daily time frame, this is what we have. We have our premium and discount, We also have imbalance here. So for the coming week, which is February, it will be first week of February, we'll be expecting sell-on until when we take all this internal range liquidity on the weekly time frame and daily time frame. That's on GBPUSD, GBPUSD and DXY. So what we do now is, price will now take some liquidities also, buy side liquidities before continuation. So that's when you need to come and do top-down analysis. Going back to 4-hour time frame, we have a market structure shift here. We have an imbalance here, which will now act as our internal range liquidity in premium. So price on H4 will likely to come back here, and then we will expect continuation. So no need for you just for the coming opening week, you just go ahead and start selling. No, there are something that need to be happening. The price will engineer some liquidities, which is to come back here on H4 time frame, and then we will expect that continuation. So if we go back a little bit on the previous week Friday, we'll see that that's what we expected to be happen, and it delivered based on our anticipation. Okay, so this is the 4-hour time frame. We expect price to come back here. That's our internal range liquidity. From there, then you sell down to this level. So the coming week we will now expect full retracement back, and then we continuation. So what we do here and how I do it is only by using premium and discount. Premium and discount, internal and external range liquidity, and with some PDRs, okay? With some PDRs and entry criteria. What are those entry criteria? Is only fair value gap, market structure shift, and order block or inversion fair value gap. That's only what you need to just keep it simple. Keep it simple, it's here. So don't have my word for it. Go there, open your chart and see. You can see it yourself, how it's working, how it's delivering. You can see it, you can do it yourself, okay? So now let's take a look on EURUSD. Even though I've already told you that since DXY is going to be bullish, okay? So we are expecting bearish on GBP and Euro. GBP and Euro, they are correlated pair. What I mean by correlated pair, they are moving in almost the same direction. So this is what we have, premium and discount. Price is still resting in premium. That's daily time frame. So we have an imbalance here, which is resting below 50% level of that Fibonacci retracement. Where is that? Below 50% level is discount. So price might likely to come here. We have an order block here, okay? So now if we take a look on H4 time frame on EU, we will see something the same like this happen. So we have that internal liquidity that is also resting in a premium level. So price will come back here to take the liquidities that is resting above that H4 candlestick. Okay, so when Monday open, what we'll be looking for, we'll just be looking for maybe Judah swing, like wait for market to take ASEAN high and London high, or some liquidities that will be ranging in the dealing range. Then you will now be looking for selling from internal range liquidity to internal range liquidity in discount. That's how simple you can keep it. Okay, so this is my opinion, and this is what I've been expecting. Don't forget to subscribe, follow me on my X, join my Telegram channel so that you will be seeing such kind of good content, and stay alert and stay tuned. Also, I'll also share the screenshot and the total breakdown again after this video. Okay, see you soon. See you next week, and I'm wishing you a happy and a profitable week ahead. Thank you.